any uptick in share prices of Indian steel stocks is an opportunity to exit, and that's the word coming in from CLSA in its latest note. Let's get in Ashesha to understand their rationale then. Ashesha?
Well, absolutely. India has initiated anti-dumping duty, or rather investigation on anti-dumping duty on imports from Vietnam. But CLSA believes that this is unlikely to be a game changer, and that is because Vietnam accounts for less than 10% of India's total steel imports. So CLSA believes that the impact of the anti-dumping duty, if at all it were to be announced, will also be limited. They say domestic steel prices currently trade at about 8% premium as compared to parity, and duties will have to be substantial to move the needle as far as domestic steel prices are concerned. They also say that current prices of steel stocks imply sharp increase in profitability over the coming couple of quarters, but this looks unlikely as profitability of steel stocks is not likely to improve sharply going forward. As far as their stance on the sector is concerned, they are maintaining their underperformed stance on the sector, and they say that any uptick in steel stock prices will be an opportunity to exit from the sector. So a negative report that has come in where they believe that if at all anti-dumping duty were to be imposed on steel sector or imports from Vietnam, that will not have any major positive impact on the sector.
All right, Ashesha, thank you so much for taking us through that. So the steel sector and the stocks falling in that sector are going to be in focus. But with that, let's shift focus, take a look at what the brokerages are flagging off for us this morning. First up, you have a note coming in on Aurobindo Pharma from HSBC this morning. They've maintained a buy rating with a target price of 1,625 rupees per share. The FDA had issued a warning letter to their UGR3 plant, so they've also taken note of that. The plant status is already classified as OAI, which is the official action indicated, and they see low risk of an FDA import alert from the plant, and they believe that the FDA remains focused on ensuring supplies to the US. Not seeing much impact, maintained a buy rating with a target price of 1,625 for that stock. Moving on, let's also talk about Shriram Finance, because we also have an HSBC note coming in on this company as well. Maintained a buy rating, hiked the target price from 3,340 rupees to now at 3,600, so quite a significant hike coming in. They believe that the company is competitively well positioned among the entire NBFC space. It's seen the most convincing operating period in over a decade, and this is thanks to the strategic clarity as well as the healthy metrics that the company has reported, and they see option value of a credit rating upgrade for this company as well. So very positive note coming in on this front as well. Let's also focus on Glenmark Pharma this morning, because we also have a Motilal Oswal note coming in. They've upgraded the stock to a buy from a neutral rating and hiked the target price significantly at 1,850 rupees per share compared to just 1,200 rupees earlier. They believe that there are growth levers across key markets for this company, and they also believe it's gearing up for a consistent turnaround in its overall performance as well. For domestic formulations, they've remodeled distribution, in licensing, and the new launches will be aiding growth. For the US markets, they've addressed regulatory issues, and the niche pipeline that the company has is valuable for the growth trajectory as well. For the European Union, market share gains and expansion in new geographies will be driving growth, and for the rest of the world, there's a robust performance that's being seen across regions for Glenmark Pharma. So very bullish brokerage note coming in from Motilal on Glenmark Pharma as well. But Shreyansi, what are you spotting?
Well, absolutely keeping it going with bullish then, because you do have Entero Health and Jefferies coming out with a note where they're maintaining a buy with a target price of 1,510. They're talking about an inline Q1. They're talking about how recent acquisitions will be reflecting from Q3 as well. When it comes to their guidance, they're maintaining their financial year 25 revenue growth guidance of 35 to 40% then. Let's also take a quick look at Voltas, because Jefferies has also come out with a note on that one. They're talking about how there's a strong quarter for ACs coming in when it comes to Voltas. They're also penciling in a revival in margins to 7.5% by financial year 26. So that is something that Jefferies is also talking about when it comes to Voltas. And they're also talking about how the management also expects high single-digit margins, and that is something that they're highlighting as well. On to what Nomura had to say about Voltas then. Strong Q1 board by profitability in the project business is something that they're highlighting, along with the growth outlook that remains strong according to them. Margin tailwinds is something that they see currently in place, and they do remain cautious on new orders though. So that's the word coming in from Nomura when it comes to Voltas. Let's also lastly take a look at Sunteck Realty, because Jefferies has come out with a note. They're quite bullish on the counter. They're maintaining a buy rating, target price at 690 rupees from 565 rupees, and that's the hike that we've seen in terms of the target price. And they're also talking about good operations as well as large project boost. So that is something that they're highlighting, along with the strong pre-sales performance as well as a good financial year 26 launch pipeline that Jefferies has highlighted when it comes to Suntec Realty. So that largely is the roundup when it comes to brokerages.
All right, so that's all the stocks that brokers are flagging off for us this morning. Largely very bullish notes coming in, but on that.
If you like this video, then like, share and subscribe to ET Now.